Thanks very much for taking the time to join me to talk about IsoEnergy, uranium discovery in the Athabasca Basin. Let's get right into it. So, the uranium story. 40% of the world's mined uranium supply has been taken out of the equation over the last couple of years due to low uranium prices. And that has certainly had an impact on the price. And in fact, McArthur River, the world's largest uranium mine, has now been closed for 2 full years. So the uranium price 2016, before those closures started to happen, about $18 a pound. We're now up into the high 20s, so we're certainly seeing some effect there. Craig Perry, my boss, the CEO of IsoEnergy, would tell you that's a shot of Beijing at noon yesterday downtown. So I'm going to tell you about a little discovery timeline here. It's not our discovery. I'll discuss that in a few minutes. But this is NexGen, our parent company. We were spun out of NexGen in 2016. NexGen was formed in 2011, basically as the Fukushima disaster happened. What a terrible time to start a uranium exploration company. So you wouldn't think that this would go very well. And in fact, it was pretty rough, I think, for the first while. They didn't actually list until 2013. But they did manage to do some exploration. They had a few drilling programs in the Athabasca Basin. And made a discovery early 2014 when they were trading at about 20 cents. They put out a lot of good news releases, some terrific intersections. They had discovered the Arrow deposit, which is a complete disrupting change to the uranium sector. They did manage to get the share price up around about $1 by early 2016 and then published their maiden resource estimate for the Arrow deposit. They traded subsequently as high as $4.50. They've settled back down to about the $1.70 level. Still pretty much a 10-bagger from when they first discovered Arrow. So my point in all this is that discovery in the Athabasca Basin still matters, even in the worst bear market that we've seen. So in 2011, before the Fukushima accident, our combined market cap for the uranium exploration and developers, and miners actually, about $150 billion. In 2018, that had shrunk to somewhere around $15 billion. So the beta potential alone in our sector is pretty much a 10-bagger. I think that's actually come off since then. I think right now we're probably less than about $13 billion for our sector. And Craig, again, would tell you that at one point this year, that was less than the market cap of Beyond Meat, a company that makes fake meat. And yet we supply the fuel for 15% of the world's energy production as a sector. Completely unsustainable. That's got to change. And of course, that's just the beta potential to get you back up to those pre-2000 levels. But in a bull run, many of you might remember the 2004 to 2007 period when certainly many multiples almost all equities did very well, uranium equities. So if you want to pick a basket of good companies to follow and make a portfolio at this point, your job has been made much easier because in 2011 there were about 500 uranium exploration and development equities in the business. We're now down to about 70, and probably only about half of those are really worth your time to look at. So you can make a basket of those if you want, or you can focus on the ones that have a recent high-grade uranium discovery, and we do have one of those, IsoEnergy. So there you see our best hole into the hurricane zone to date. We discovered that last year in 2018. That's LE 1916A, 7 meters of 5% uranium. In gold equivalent terms, that's 7 meters of 2 ounces of gold. Really, it's the dark core that you see up on that slide between the yellow bars. That's the 7-meter intersection. A bit of a summary of some of the results that we've seen from our drilling in 2019 is on the right-hand side. Yeah, so just stepping back just a little bit to give you a feeling for our general strategy. As I said, we were spun out of NexGen in 2016. We acquired 5 of their licenses in the eastern Athabasca at that time. They are the smaller ones that you would see on there, and we've been adding to our portfolio of properties since then, trying to take advantage of bottom-of-market conditions to do that. And we've been successful. We're up to about 14 properties on the east side and have a significant land holding there now. And so in 2011, everybody kind of ran out of money at the same time. A lot of work had been done in that previous 5 years when the uranium price boomed. And there were a lot of uranium intersections that were drilled in the eastern side of the Athabasca that have never been properly followed up post-2011. And so that's really what we're trying to do. And we've been successful, and that's what the hurricane zone is. We're also drilling for basement-hosted mineralization. That's what Arrow is. We're trying to bring that model over to the eastern side, where that entire eastern side has not been effectively explored for that kind of mineralization. So a little bit more about the hurricane zone. We discovered it in 2018. Actually, we drilled it 8 weeks after we bought this property. It's the Larocque East property. We bought it from Cameco. $300,000 worth of shares and $20,000 cash gets you 100% of ground in the eastern Athabasca. That's just an example of what you can do in these markets. We've drilled 2 follow-up campaigns, both of them in 2019. We've now stretched the zone out to 500 meters long, 40 meters across, up to 10 meters thick. Is that significant? We've overlaid the Denison's Phoenix A deposit just for a sense of scale. It's 350 meters long. You see it on the top of the slide there. It's 40 meters across. It's 5 to 6 meters thick on average and contains 60 million pounds of uranium, maybe about equivalent to 1.5 million ounces of gold in that tiny little piece of ground. So yeah, we have a significant discovery on our hands. I'm not trying to tell you that there are 60 million pounds in our deposit. I don't know. We don't have a mineral resource estimate. It's too early for us. I can tell you that we don't have the grades that Phoenix has, so we have to grow it and find more volume there before we can get up to 60 million pounds. I guess most importantly, it's relatively shallow. It's only 330 meters below surface. It's close to a mill. It's only 40 kilometers from Orano's McLean Lake Mill. There's no lake or water cover above us. Some sections that give you an idea that it's just very sparsely drilled. And I guess this also helps to point that up. There's a 250 meter gap between drill sections on the eastern side, or on the right-hand side of that polygon. So what are we going to do next? We'll be drilling again in the wintertime. That is the best time to drill in the Athabasca Basin when everything's frozen solid. And we're going to bring in a second rig, so for the first time we'll have 2 drills on the ground. One will be devoted to infill drilling on the current 500 meter long hurricane zone footprint. The other one will work on extending mineralization out to the east. And this map on the left shows what we think we're getting into quite nicely. The colors on there are a new geophysical survey, DC resistivity, that we completed in the summertime. It really just shows graphite in the basement rocks. And graphite in the Athabasca Basin is associated with uranium. So you can certainly see that we're getting into hotter colors there as we move to the east. More graphite. We're extremely excited about the exploration potential as we continue to grow the system to the east. It is wide open in that direction. It's wide open the other way also, but we run into the property boundary 75 meters from our drilling. So there's the share structure. I think we are the only uranium exploration company on the planet that's in positive territory for the past 52 weeks. And that's because of NexGen's involvement in the company and the discovery of the hurricane zone. Each of those big run-ups in uranium price on that share price graph is because of drill results that we report when we're actually drilling. So again, we'll be back drilling again January to March. There's our share structure. Last week we announced the financing. We raised $6.1 million. So you need to add 14 million shares to that issued and outstanding share number and add 6.1 to the cash on hand. NexGen still owns 54%. They maintain their shareholding above 50%. So that's it. Uranium prices won't stay this long for very long. Equities are going to rise, and discoveries still matter. And weight your portfolio to those that have a new high-grade discovery, and that's us. So thanks very much.